Are we in an AI bubble? Does the AI bubble remind us of the dot-com bubble? We're going to have this conversation with Taylor from LifeGoal Investments. How you doing, man?
I'm doing great. This is an interesting topic because I think this is floating around. I don't think there's a perfect answer for it, but I think there are some corollaries that can be drawn, similarities between now and the 1990s when the dot-com numbers were so hysterical, and I think that we'll do a good job fleshing this out.
Well, remind me of this. I believe you were in college when the dot-com kind of blow up happened in the early 2000s. Is that right? Or were in high school?
No, I'm 88. I was born in 88. I was in
Oh,
middle school at this point.
oh,
I didn't
damn.
I didn't know what the stock market was, but I can promise you I've done a lot of studying on it now.
Yeah. And the reason I bring that up is because I was in the throes of the dot-com crisis, or actually I ran it up. I wrote that thing from 7 grand to 200 only to turn around and see it all disappear to 40. So I remember the feeling of Google going public. I remember the feeling of Facebook going public. I remember I remember pets.com. I remember Webvan. I remember Excite. I remember all of these things going to zero. Um,
And you
so
were
yeah,
on
this
Cisco, if I recall correctly, correct?
correct. Yeah, Cisco Systems was the stock that I was running and playing with and day trading and doing stupid things with. And yeah, so but yeah, I mean I see a lot of similarities. So let's talk about the AI bubble. Most people will think Nvidia. To me, Nvidia is the picks and shovels, but there's also all of these other companies just throwing AI on their name, and they're changing their pitch and all of that. So when I talk about AI bubble, what are you seeing as an investor?
Yeah, I think your point of the picks and shovels is really well put. This goes all the way back to the gold miners. Back in the gold mining days, you could invest in things as well, and it wasn't very profitable to go out and pick an individual gold miner to put your money on. But it was really good to pick the person selling the picks and shovels to all the gold miners because you knew they were going to win along the way. And that's the market's approach right now with buying Nvidia. Nvidia is buying or is powering the back end GPU, chip oriented things that powering these large language models. And that's why they've gone parabolic to say the least. Last week, or was it 2 weeks ago now? 2 weeks ago, that was throughout my investing career, the most focus I've ever seen on one individual company reporting.
Hmm?
And they blew it out, right? They really
Every
did.
every
They held
metric,
up
every
every
metric.
single metric. It was across the board. They crushed it. Stock went up 14% overnight. For context, the increase in market cap was the same as Target. The entire value of Target was the increase in market cap. Volkswagen, you name it. That is the increase in value overnight in Nvidia. It's the fastest company to go from $1 trillion in market cap to $2 trillion in market cap. And so, listen, at the end of the day, if you rewind back to the 1990s, and this is a perfect corollary for NVIDIA, and I'm not pretending what's to come in the future for NVIDIA, but the picks and shovels for the dot-com era was broadband. And
Mhm.
we needed broadband throughout the nation. And so you had these companies then progressing and building out this broadband capability for, yahoo.com and pets.com, which is ridiculous. All of those things to utilize. And 5 years later, they were literally burying because it was unused, nothing to do with it. They were burying broadband in landfills. And so it's not to say even the picks and shovels can't be overproduced. One of the things that I think is scary in the market right now is the fact that, hey, there is this, or at least there was this supply constraint on things like NVIDIA. And so, do we just go out and buy as many of these chips as we can, get
Mhm.
ours now? And then what
Yeah.
happens if those aren't actually all needed? And
Yeah,
so we'll see how that
double and
comes
triple
down.
ordering, things like
Yeah,
that. Yeah.
exactly.
So again, as we said in the opening, I was playing with Cisco Systems a lot and running it up. So I may be extremely biased in my kind of look back, but I see a lot of correlation to Cisco and Nvidia because again, to me, Cisco was, at least for a time, the backbone of the internet,
Right.
right? Right. Switches, routers, all of that. And for a long time, um, they were the only answer, like Nvidia is today. But having been through the entire cycle of Cisco, I mean, I think it is still true today. Cisco's stock peaked, I think, in 2000 or 2001, and hasn't been back
Right.
since. So
I
it's
do
been
know that
dead.
that's a fact. That is a fact,
Yeah.
what you've just stated there.
Yeah. It's dead money. That said, Cisco's revenue is probably doubled, maybe even tripled since then.
I'm sure.
So
I'm
again,
sure.
right. So again, this is all valuations and all of that. So what does this mean for Nvidia, in my opinion? Again, I think Nvidia is going to have a nice run. They've already had a nice run. I think it goes a little further, but you're already seeing competitors at the edges, like AMD is the best example.
Yep.
Cisco got competition, right? It was Broadcom, and then Juniper, and all these other network makers. Like your fat margins are my opportunity.
Yep.
Um, so there will be competition if not already, it's coming, but it'll take time.
Yeah.
Right now, they're the only answer.
And I think when you look at the Magnificent Seven, you're getting a divergence right now. So
Mm.
3 out of the Magnificent Seven right now are down year to date. Tesla's gotten smoked. I think they're down 20 year to date. Apple's down like 6% year to date. And then Google is down as well. Now, Google being the outlier here because Google is very involved in this AI play. I think they've just screwed up a lot of different turns. But the
Execution has
remaining,
been horrible.
correct, correct. But if you look at the other 4 being, and I may need help on this, Meta, you're
Mhm,
looking at Nvidia, you're looking
mhm.
at
Amazon,
Microsoft, and you're looking
Amazon.
at Amazon. All of them very, very, very integral in this AI play, and all talking about and touting all the future success that's going to come along with it. And there's your divergence.
Mhm.
Apple really hasn't come up with a big AI play at this point. And Tesla is, Tesla's kind of got their own thing going on. And then Nvidia has screwed up their own AI, but the other 4 are showing lots of progress with AI. The reality is with AI at this point is it's all future earnings expectations. It is
Well,
not current profitability.
yeah, the thing that if we're going to call AI a bubble, which I'll let the audience decide if AI is a bubble. This is the next thing because again, this is very much the .com era to me, and we AI needs to go from a pet rock to solving real problems, and I think we're right on the cusp. I read an article, JP Morgan, I have it on my daily financial news. JP Morgan has helped corporate clients slash manual work 90% with cash flow management tools powered by AI. There was a software company, I believe, that unlocks customer support with AI. We are starting to get to like some real stuff.
Yep.
And that is going to be fun to watch over the next, 4 to 8 quarters.
When you look at these big revolutionary or evolutionary type products like the internet or whatever it may be, they all have this tendency to follow the same pattern. The excitement gets euphoric on the front end.
Mhm.
It underwhelms for a period of time because it just takes time to make these things profitable, and
Yeah.
the market corrects, and then they actually are underappreciated in the long term. And I think
Mhm.
that if you look back to the internet, I think that's like the best analogy you could ever have. These .com things got euphoric,
Oh,
and you
dude,
were
that
involved.
oh, I don't know what euphoric squared or euphoric cubed is, but dude, it was wild living in the
I
valley in
can't
the
give it
dark.
context like you can. You were there.
It was wild.
But that's the progression with these big evolutionary type things is they get euphoric, the market gets ahead of itself, a pinprick happens, it comes back down on the other side, and then it starts to meddle around. People got their hands burnt, so they're scared and they don't want to dive back into that space. And then what happens is the profits start to move ahead, and people actually underappreciate the long-term success that they have the ability to create. And
Yeah.
that very well could be the cycle that we're in right now. And if that is the cycle that we're in, things have to come back down to some normalcy. And there could be the argument that that is a bubble that you're referencing there. And again, up, then down, then sideways, and then the market doesn't realize the inflection point that can be created there.
You've done a lot of research on the .com era. This is what it feels like to me, but you may have better context. If I were to take the cumulative amount of money raised for quote unquote .com companies, and
Yep.
then fast forward 5 years, kind of feels like 80 to 85% of those companies went to zero. Maybe 5 to 7% got bought for acquisitions. And then, we had some great companies come out of it. But
Yep.
the point is, most of that stuff went to freaking zero.
Yep. Yep. I think the big outstanding threat to the market right now is the fact that there are new up and coming companies that aren't even publicly traded. They're privately funded
Mhm.
via venture capital, et cetera, behind the scenes right now that could absolutely come on and disrupt a Google. Maybe everyone doesn't just go to search like they have historically. And maybe that's what some of the market's pricing in with Google right now. But all of these up and coming new softwares, the moats around these businesses, yeah, maybe an Amazon with a delivery. There's a huge moat there. I totally
Yeah.
get that. But the moats really aren't that significant with fast moving technology like this in a lot of these spaces. And that's being totally underappreciated by the market right now with just the performance of, again, these Magnificent Seven over the past, year or so.
Well, the other thing that I'm starting to see in the Valley, and again, being here in the Valley is a lot of fun. There's more and more companies talking about taking on using AI to kind of build their companies. And they're talking about having, 1 to 8 engineers. It's no longer
Interesting.
I've got to go compete with Google, Facebook, and Amazon and Microsoft to buy the best talent and pay 400 grand. It's like, no, I'm going to go get 3 of my buddies from college. We're all going to chip in 100 grand. Let's get a 2 year runway and try to build something. There's going to be a lot of companies. I actually heard on the All In podcast, and I agree with this. I think there's going to be a unicorn company, meaning $1 billion valuation, created in the next 2 to 3 years that has less than 5 employees. Think about that.
Woo! Woo! You talk about profit. I can't imagine what that stock would do. Can you imagine? I mean, we're looking at profit margins right now in places like Microsoft and saying, man, these are blowout profit margins. How many people does Microsoft employ?
Yeah, a lot.
Yeah, I will say this, coming from the wealth management aspect of things, the number of folks that are extremely wealthy in like the coding back end technology type space is incredible, and they are very skilled. And I don't speak the language, so I don't know. I'm sure they all do different things that AI can't do, but maybe some of the lower tier people can be replicated by AI that are
Oh
making
yeah. No, I
200 a year or something.
I spoke with I don't know, a 10x engineer, one of my buddies in my network, and he's like, Michael, you don't get it. It's here. AI can do basic coding today. You're more like a prompt engineer. Now, again, you have to go in and you have to do, different things for security and scalability and things and tweak. But he's like, no, I could create. He told me the other day, if he was going to take kind of a point solution, like any point solution, he's like, Michael, if you gave me 2 weeks of dedicated effort, I could recreate 90% of it with AI. I'm like, oh God, what is going to go on with engineers and computer scientists in the long run, right?
Yeah. And I've used a lot of the services on my end. Like, hey, I'm thinking, hey, I do videos every single day. I'm like, hey, can I just plug in the topics and maybe this thought creation can be created on my behalf? It's interesting. What I've found is about 50-50 the accuracy on it. And maybe this is just the financial world versus
Yeah,
other worlds, but 50-50 is the accuracy. So I'm like, listen, if I have to go back and spot check all these,
yeah, it's
it's
not
easier
worth it.
just to me go derive the information myself
Yeah.
from the raw source rather than trusting this or having to go back and spot check it. So it's
Mhm.
definitely got use cases, but it's definitely got its deficiencies as well.
No, no. I mean, I think one of the things that'll be very tough for AI to kind of go after is what you do on Instagram, right? With your 60-second talks. You're always going to have a human doing that because we can pull our experience and all these other data sources together to give an opinion. I think AI is going to do great things for repeatable tasks, which when you break down coding, it's repeatable for a lot of it. When
Yep.
you break down customer service, it's repeatable. When you break down, according to JP Morgan, cash flow management, it's clearly repeatable. Um, it's gonna be exciting to watch. I think AI is without question here. I think AI is real. Like the metaverse, never real. AI, real. What do you think?
I totally agree. When the metaverse came, so also like Apple just kind of tried to recreate what the metaverse did
Mhm.
when they brought these goggles to market. And I looked at this and I'm like, guys, their revenues are negative year over year. Prior to these goggles, I'm like, their next evolutionary thing is going to be goggles that are $3,500. I'm like, who's wearing these things? And people are like, Taylor, you never thought everyone would use the iPhone either. I'm like, Okay, maybe I'm
Maybe,
so far
yeah.
off base, but like something that goes in my pocket, I don't know. I could get around my head around that. Also, something that goes in my pocket also came out at $250 or $500 when it initially came out, not $3,500. That's a price tag that's most people's take home monthly paycheck, more than it.
So what you're telling me is you only have two of those goggles at home. That's what you're telling me?
I love the videos of someone driving a Tesla with them on. It's like this is amazing.
Wow.
I mean,
Wow.
scary as all hell, but amazing.
Glad he's not in my city. Exactly, exactly. Well, do me a favor, Taylor. Where can people find you?
Yeah, find us at LifeGoal Investments is our handle. We're on both Instagram and on TikTok at LifeGoal Investments.
Thank you, buddy.